Hi, this is Roby Thomas, Bay Area Downsizer, bringing you the latest market update for July 2025. This is 30 days delayed data, so it won't be as accurate, but there's a follow up market update which I do on a weekly basis for uh, a cluster of cities like the Tri City and the Tri Valley and the specific cities where my clients are looking at in thinking of selling or buying. So let's check it out. My name is Robbie Thomas again, Bay Area Downsizer, 510-374-2264. So let's get into it. So buyers are right now checking out new construction more than ever because there's so much more inventory that is not selling. And if they are okay with the commute and the school area, and proximity to their work area, because if it's a younger family, they both husband and wife or partners together are working full time. They want to be as close to the work area as possible, simply because the market is already starting to correct, and commute time is a big issue. Let's look at the next slide. So here's what's happened in since May 2024 to May 2025. You can see it's seasonally adjusted and it's a month supply. So the newly built home inventory continues to rise. This green is 9.8 now. So there's much more inventory. Next slide. Here's what Zonda says: 57% of new home communities in May offered incentives on to be built homes and 75% on quick move in supply. So, what this means is most builders are now giving closing costs, or if you work through their lender, they're giving you an incentive to buy down your interest rates or pay towards your upgrades on property. Incentives in many shapes and forms. The one thing they do not want to discuss about is reducing price, because if all it takes is one property's price to be reduced and the entire community's baseline pricing comes down. Let's look at the next slide. Excuse me. New home buyers are getting an increasingly large mortgage rate discount, meaning over the 30-year mortgage rates by home type. If you see the existing homes, which are the blue line, and the newly built homes is the green line. So if you look carefully, that the older homes or the resale homes, the average is 6.5 to 6.6, that bracket price range for the interest rates. Meanwhile, for the new homes, they're getting it at 6.1 to 6.2. That's another incentive. And this is from realtor.com. Next slide. The main reason that mortgage rates are lower for new homes is that builders are offering below market rates to buyers as an incentive to close deals, primarily through mortgage rate buy downs. I just discussed this earlier. Let's look at the next slide. So this here is a bar chart from, as you can see, more and more builders are cutting prices, and the percentage of builders cutting prices are increasing. In June 2025, you see 37% are welcoming the price cut or are cutting prices, although because the worst thing they can do is cut prices, as I discussed earlier. Well, if the inventory is not moving and then there is more building starts coming in the pipeline, because these permits take about a year to get through the city before even construction starts. So there's a lot of carrying costs, and so they want to get the built up ones off their hands, and so they cut their cost. Let's look at the next slide. So the latest HMI survey also revealed that 37% of builders reported cutting prices in June, the highest percentage since NAHB began tracking this figure on a monthly basis in 2022. So this is kind of recent tracking of data. That's why you're getting more and more updated information. And we'll see that as we go into the next 2 or 3 years, where builders will continue to cut prices to move the inventory. Next slide. Let's look at the buyer and seller imbalance. So this chart is actually from Redfin, and if you look at it, the estimated number of buyers and sellers active in the market, so there's 1,943,669 during this June-July period. of sellers, you can see the uptick in this brilliant green line. So and the inverse of the number of actual buyers. So the buyers are 1,453,628. And 628. This data is not entirely accurate because they also club in the um, the first time home buyers and resale buyers who are step up buyers, and also people who just take their mortgage applications, which cannot be really considered as a real number. But still, this is happening right now because the formula they use is still consistent with the sellers and the buyers. And look at this: there's a clear deviation and a nice, this probably looks like a 45-degree angle here, and a continuous downtick trend in buyers. So there's about a gap of 500,000, with 500,000 more sellers in the market nationwide than there are buyers. That shows that when inventory goes up that high, prices are going to correct. Let's go to the next slide. So this is from the Associated Press. Fewer buyers means less competition for home listings and more pressure on sellers to dial back their asking price and make other concessions to help get a deal done. That's a stark reversal from just a few years ago. Actually, it's not a few years ago, but a few months ago, you could see there's a complete flip where the buyers are not cooperating with the sellers in their asking price going on. When it wasn't uncommon for homeowners to receive offers well above their asking price from multiple home shoppers, which is true. See, even the ones which are going pending from the MLS, there's barely any um, number of offers, very, very few offers, very, very few offers are there. So that also says that it's a real tough time for sellers. Let's look at what Andy Walden, the head of mortgage and housing market research of Intercontinental Exchange, says. We continue to see an inflection in the housing market as home price softening expands beyond the Sun Belt into the West, with inventory levels beginning to normalize across much of the country. Prospective home buyers are finally beginning to see some long anticipated price relief. Yes, buyers are definitely negotiating prices to what they're comfortable paying. Next slide. What we see is home price growth is decelerating. I was having a conversation recently with a potential seller, and they were asking why wait or why not wait, and my reasoning towards it. And here's my reasoning, which is all these homes that didn't sell in the beginning of spring of this year have taken themselves outside the market. They've either canceled the listing or it's expired. And they are now waiting to come back into the market for 2026 spring, which I think is not a great idea because the market itself is decelerating and the home price growth, which is the rate of appreciation, is decelerating. So even if the list price is priced based on comparables which recently sold data, it really doesn't make sense because in a declining market is the opposite of um, a market that's going frothing higher, because nobody wants to catch a falling knife, and it takes only one property. I always say, real estate is priced at the outlier. It takes only one property for to sold at a lower than asking price for the entire neighborhood pricing to go down. So here you can see the home price growth is decelerating and really nearly touching the base over here. It last touched here in 2023 of July, and now it's in May, June area. It's again coming down here. Okay. Next is NHB says house price growth slowed in the first quarter of 2025, partly due to a decline in demand and an increase in supply. Persistent high mortgage rates and increased inventory combined to ease upward pressure on house prices. These factors signaled a cooling market following rapid gains seen in previous years. Next slide. Now, this is an interesting chart. Uh, which is 22 of the 50 largest metros have falling home prices. And if you look at it from 1 year change in home price in 50 largest metros from May 2024 to May 2025, these are all the metros listed here at the bottom. And you can see it went from 5% at the peak in Cleveland, Ohio, to Austin, Texas, which is more than 5, maybe 5.5% over here. So 22 of the 50 largest metros, so almost 50% of the metros are falling home prices. And this is from May 2024 to May 2025. Now, this is the 18th of August, and this is probably much, much more, but there's no charts to show it. So maybe the next update, I'll have another chart. Next slide. So, what to expect in the second half of 2025? That's the whole big 800 pound gorilla in the room when nobody knows what to do with all the data. And let's dive into it and try to make sense of it. So, here Greg McBride, of Chief Financial Analyst of Bankrate, says home price appreciation will be tepid when looked at from 35,000 feet, with many markets seeing little or no change in prices, but rising inventory has some formerly hot real estate markets shifting from a seller's market to a buyer's market and will be susceptible to price declines. Yes, they are. Prices are dropping zip code to zip code. Depends, not everywhere, but depends on condition of property, depends on proximity to freeway or shopping, schools, various factors. But prices are correcting. Next slide. So 2025 home price forecast. So this is from all the Fannie Mae, Cotality, HPES, NAR, Wells Fargo, MBA, Redfin, and Zillow. You see that percentage change as of 7/2/2025, they've corrected their forecasts. So average of all eight is 1.9%. Zillow is at minus 1.4% and Redfin at minus 1%. These used to be uber bulls in the pricing for the end of 2025, and they just completely flipped to the red. So they know they're tracking the numbers. So let's follow what they're doing and we'll do some additional work. Next slide. So this is Mike Simonsen, co-founder of Altos Research. The vibes for home prices are growing much more bearish for the rest of 2025. We can see that inventory levels, especially in the Sun Belt, are now sufficient to put downward pressure on home prices. This seems likely to continue and spread to more states. However, there isn't much in the data that shows significant price declines. This data again is 30 days delayed. That has changed. Right now, there is significant price declines. Next chart. So let's look at the original. Most 2025 home price forecasts are trending down. Forecasts from 2012, 2024 versus current forecast. So Fannie Mae originally said 3.6%. Current forecast is 4.1%. Cotality was 2.3% original forecast. Now 3.4%. Home price expectation survey, HPES, 3.8%, and now 3%. See, there's a clear difference here. From 3.8 to 3 is a 0.8 difference over here. National Association of Realtors, 2% to 3%. This is green. Wells Fargo says 4.9% to 2.6 is almost 50% down, 40 something percent down. Mortgage Bankers Association, MBA, 1% to 1.3%. Redfin, 4% to minus 1%. This is the hugest decline in estimates. And Zillow from 2.9% to minus 1.4%. And the average of all eight are 3.1% original forecast to 1.9. So clearly down, it's going down. That's their estimate trending down. James Egan, housing strategist of Morgan Stanley, says, looking ahead through the rest of this year and into 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So affordability will remain pressured. The next one is don't expect big price and mortgage rates. 30-year fixed mortgage rate projections as of 7/2/2025. 2025 quarter 3, Fannie Mae 6.6, MBA 6.8, Wells Fargo 6.65, and the average of all three is 6.68. Quarter 4, 2025, 6.5, Fannie Mae, MBA 6.8, Wells Fargo 6.55, consensus of all three 6.62. First quarter of 2026, 6.3 Fannie Mae, 6.7 MBA, 6.5 Wells Fargo, and the consensus of all three 6.5%. And the quarter 2 of 2026, Fannie Mae says 6.2%, MBA 6.6%, Wells Fargo 6.5%, and the consensus is 6.43%. So now they've changed the tune and they say they don't expect a big drop in mortgage rates, which is not the case, which was not the case a few quarters ago. The next slide is mortgage rates expected to stay in the sixes. Well, this is just a line chart, which shows the same thing plotted on a graph. Next one is Selma Hepp, of chief economist of Totality, says the prospect of elevated mortgage rates throughout 2025 suggests that housing market activity will continue to be challenged. So if you're thinking of selling a house and you want it sold fast for top dollar, and top dollar is always what the buyer is willing to pay and not what the seller thinks it is. Seller can put a sticker price based on the marketplace average prices, median prices, depending on updates, and the realtor's expertise and what kind of systems they employ to get the desired results. Now, the next slide is sales will remain low, but up slightly from last year. So 2024 total sales nationwide was 4,067,000, and 4.3 million, 4.311 million according to NAR. MBA says 4.21 million. Wells Fargo 4.148 million. Fannie Mae 4.143 million. And Zillow 4.14 million. So it's a very low number. During 2021-22, the highest it touched was 6.4 something, in that range. Total sales. Here's the newly built homes sales, and they will remain largely unchanged, which is here 686,000 in 2024 will sell. This is the estimates according to NAR, MBA, Wells Fargo, and Fannie Mae. This one is NAHB chief economist Robert Dietz says that given current market conditions, the home builder trade group is forecasting a decline in single family starts across 2025. So new home construction is going to slow down because they already have a large inventory they need to get rid of. I'll just look at the next chart. Fewer newly built homes will be coming to the market. So seasonally adjusted annual rate of new home starts, and this is from January 2025. The construction went up to 1.48, something close to 1.5 million, dipped down to 1.35 million, went up a little bit in April of 2025 to 1.38 something million, and now in May 2025 it's down to the lowest, just about 1.25 million. So that means probably in a year's time, the new home construction houses on the market will be lower, but we'll have to deal with competing more number of homes on the market to sell, and therefore a continued declining prices. Shoppers in the market for a new home will still have options in many markets and are likely to be in a good place to negotiate, but builders are already adjusting their outlooks and slowing the development pipeline, which could mean that the new homes are harder to come by in the next year. That's what I just discussed. Daniel Hale, a chief economist of Realtor.com, says. And that's all we have, but just wanted to let you know that the market is continuing to slow down and the interest rates at this current levels are still elevated. And even with the interest rates going down, I do not think that the market is going to stabilize in the next few quarters, only because there's a lot more corporate job losses, the new AI revolution, the outlook of the entire economy, the world economy, the bond market. There's a lot of things at play right now, and too many points to actually align and figure out if the market will continue to rise. And given the fact that in certain areas, especially the East Coast and the West Coast, in California particularly, house prices have almost doubled in the last 3 to 4 years, which is unprecedented and unsustainable. So, mortgage that used to be affordable is almost not affordable for a new home buyer or a step up buyer. So, keeping that in mind, if you're thinking of selling, do price your home right. Make sure you work with the realtor who knows what they're doing. Interview as many realtors as possible. And if you're a buyer, always work with somebody who knows the market, who knows how to negotiate and show value. Wishing you the best. This is Robbie Thomas, Bay Area Downsizer. Until next time.